Very good morning, friends. So we are entering into the 7th day of our SCM PE course. In the last class, we were doing the problems from decision making, and I think when we stopped the class, we were doing one problem, and in between there was some connectivity issue due to which we were not able to complete that particular question. Now that was towards the end of the question, and in the video which I have already shared with you all in the recorded version, I have already completed that particular topic also. Okay, it just goes for 2 to 3 minutes only. After that, it's just to complete whatever computation we were doing, just to complete that computation. And I think this is where we stopped. Okay, so I'm not going to take that particular question again in this class, because if I do that, I will have to start from the first beginning of the question onwards. So I'm leaving that to you. The solution is already available in the recorded session which I have already given. So you can go through that and you can complete that particular problem. Okay. Now, as I told in the last class, there is one more topic which is pending in decision making, that is with regard to the limiting factor analysis. But we have already seen what do you mean by limiting factor, how to identify limiting factor, and all those things for the previous problem. And we have to do a couple of problems from the exercise part also before we move to the next topic or next chapter. Okay, so we will continue with the last topic. You can write the heading product mix decision. That is the last topic in chapter 6a, product mix decision. Product mix decision. Now, what do you mean by product mix decision? This product mix decision will get its relevance only in case of multi-product situation. What do you mean by multi-product situation? A situation where there are more than one type of products. Okay, multi-product situation. When you have a multi-product situation plus there is a limiting factor. In the previous lecture, we have already seen what do you mean by limiting factor. A limiting factor is any factor of production which limits the production of the entire products to the maximum required quantity. Okay, that is a limiting factor. A limiting factor is any factor which limits the production of the products. Okay, so limits the production of the product means we are constrained to stop the production at a level which is below the maximum level required due to the lack or shortage of any particular factor. And that particular factor which acts as a constraint or limiting factor is what is known as a limiting factor or a key factor. This is also known as limiting factor or key factor or constraint factor. Okay, so that is a limiting factor. So in a situation where there are more than one products, that is a multi-product situation, and there is a limiting factor, how do you determine the product mix to be adopted? Product mix to be adopted. Okay, such decisions are what is known as product mix decision. And what is the criteria to be adopted for determining the product mix? The criteria is very simple. This product mix should yield as the maximum profit to the entity. If you have an entity and that entity has a limiting factor, then the optimum mix which you are computing should be capable of giving you the maximum profit that is possible with the limited quantity available. Okay, now how to take a decision if this is your objective? If this is the objective, you take a decision based on contribution per unit of limiting factor. Okay, that means if labor hours act as a limiting factor, then the optimum product mix, the product mix to be adopted, this is also known as optimum product mix. Optimum product mix. And what do you mean by optimum product mix? Optimum product mix is the product mix which gives the maximum profit to the entity. Okay, so the calculation of the optimum product mix should be based on the contribution per unit of limiting factor. Friends, we have already seen the same principles in the previous questions. When I explained the previous questions, I have already given you certain steps and those things, right? Yeah. This is the notes for the previous day, decision making in case of limiting factor. Okay, so what did we do in this session? We computed the, if you see the steps, okay, the step 1 was compute the contribution per unit of each product. Means what? If you have more than one products, you compute the contribution per unit of each products. Okay, then compute the quantity of limiting factor required for each units of the product. Okay, so you need to identify the limiting factor. Then after identifying the limiting factor, then you should compute the quantity of limiting factor required for each unit of these products. If there are 4 products, for each product, how many units of limiting factor is required for producing 1 unit? That is the second step. Then what you have to do? Contribution per limiting factor. This is the crucial aspect. Okay, any product which gives a higher contribution per unit of limiting factor is to be considered as the most profitable product. So if out of 4 products, one is the most profitable product, then obviously when you compute a production mix, the best preference have to be given to that particular product which has the highest rank. Am I right? Okay, so compute the contribution per limiting factor for all the products. Then what are you doing? Rank the products on the basis of the contribution per limiting factor. Okay, and how to rank it? The product with the highest contribution per unit of limiting factor will be given the highest rank, then followed by the other products in the hierarchy of the order. Hierarchy of the order of what? Hierarchy of order of the contribution per unit of limiting factor. Then what you have to do? You need to plan the production on the basis of the rank. How to plan the production? Whichever product has got the highest rank, that has to be produced to the maximum quantity. Okay, once that particular quantity the product has been produced to the maximum, what do you have to do? If you still have some surplus limiting factor available, then you go to the next highest ranked product, that is second ranked product, and produce that also to the maximum possible extent. Okay, then still even after producing the second rank product, you have some surplus limiting factor available with you, then what you have to do? You go to the third rank product. Then like that, after completing third rank, then you go to the fourth rank. Like that you will continue till what time? Till your entire limiting factor is fully exhausted. Is it clear? So that is how you find out the optimum product mix. Okay, so since we have already written the steps, I'm not giving you any steps here. Okay, but I can tell you, we will write a note. In case of multi-product situations with limiting factor. So there are 2 criteria. One is it should be a multi-product situation. Then second, there should be a limiting factor. Okay, with a limiting factor, multi-product situation with a limiting factor. Then what you are supposed to do? The optimum product mix should be computed based on the contribution per unit of limiting factor. per unit of limiting factor. Okay, contribution per unit of limiting factor. And what is this contribution per unit of limiting factor? How do you compute that? Contribution per unit of limiting factor is equal to contribution limiting factor is equal to contribution per unit divided by contribution per unit divided by dividing by what? Limiting factor required per unit. Okay, limiting factor required per unit. Is it clear? Okay, so this is how you compute the contribution per unit of limiting factor. You compute the contribution per unit of limiting factor for all the products, then rank the products. Then what you have to do, determine based on the rank, you determine the this one, the optimum production mix. Okay, and maximum production possible for any product is equal to lowest of A, market demand, B, production capacity. Generally, the maximum production possible for any product is considered to be the lowest of market demand and production capacity. Okay, now, but I can tell you there could be one more factor. What is that? Maximum production possible with the available limiting factor. Okay, what does it mean? If there is a product P, okay, and this product P, the demand is how much? Let us say 2000 units per month. Then production capacity is 1800 units per month. But for producing this particular product P, we require the use of a particular machine, and this machine is currently used for producing some higher ranked products, say product A, B, C, D. And after producing those higher ranked products, what surplus available is only, let us say, 2500 hours, and using this 2500 hours, you are able to produce only 1250 units. Okay, so if this is the situation, what is the maximum possible production for that particular product for product P? It is the lowest of 2000 units or 1800 units or 1250 units. So which is the lowest? 1250 units. What does it mean? Even if you have a market demand of 2000 units, you can't produce the market demand of 2000 units. Why? Because the production capacity for product B is only 1800. So out of market demand and production capacity, whichever is lower, that should be the production. Now, okay, agreed, you have a production capacity of 1800 units. But in this case, can you produce 1800 units? No. Why you are not able to produce 1800 units? Because for producing this production P, though you have sufficient capacity in terms of your, what do you call, the machine hours or whatever, there is a limiting factor. Say some machine hours or labor hours which is required for producing this particular product as well as some other products. Okay, and this product P is the third ranked product out of the product range. So definitely what you will do, you will give first preference for first rank product as well as second rank product. So after completing the production of the first rank product and second rank product, the balance available limiting factor is only 2500 units or 2500 hours. And using this 2500 hours, you are able to produce only how much units of product P? 1250 units. So, though you have a maximum capacity of 1800 units, due to the limiting factor, you are constrained to produce how much? Only 1250 units. So, what is the actual production? What is possible? It is 1250 units alone. Is it clear? Okay. Now, we will do one thing. We will straight away move to a problem. See, I have already shared you the question my class material in the previous session, right? Okay, in that if you take section B, 6B, okay, you will find detailed analysis of all these concepts of limiting factor analysis, then profitability analysis, then anything related to the long-term decisions. It is included in this chapter 6B. Okay, whenever you get time, you can go through that. Okay, and if at all you have any doubt with respect to any problem, you can ask me. I will clarify. Okay, only very few among you are asking doubts to me, and whichever doubts I feel that it should be shared with everyone, then I will share the answers to everyone in the WhatsApp group, or I will send it as a WhatsApp message so that everybody can go through it. But I want more and more people to ask me the doubts. If preferably you should be asking me the doubts as and when we take the class. I mean, in the sense, after the classes are over, in the same week, if you can ask me the doubts, it will be easy for me to answer also, because after some time I may forget whatever topics or whatever examples I have put in the class. So if you come out with certain doubts with respect to that particular example or whatever I am discussing in the class, then probably I will have to go back to the class and rehear what I have taught, and then only I will be able to explain you the concept. Okay, so preferably after the class, you go through the notes and the questions within the same week itself. If you do that, whatever doubts you are having, then and there you can text me or you can WhatsApp me. I will be replying to that. Okay, so you will have to go through these materials. Okay, these questions. These are comprehensive questions which you will require a thorough analysis of these questions. You will have to spend a bit of time for this also. Okay, now from this particular topic, what we will do is I will straight away move to the limiting factor analysis topic, what is given. Okay, so you can take question number. Sorry, there are some. Okay. Today morning onwards, there are problems with this connectivity. I hope it doesn't persist. Okay, so for the time being, we will do one problem from this particular topic, chapter 2A, section 2A. You can take question number. I've divided this particular topic into various situations. Situation 1, there is no limiting factor. Then situation 2, there is only one limiting factor. And situation 3, there are more than one limiting factor. So, and these steps to be followed in determining the optimum product mix. So those things you can go through. Okay. So right now we will do a problem in page number 18. Page number 18. Question number 6B5. Question number 6B5. You can read the question. It's a very simple problem. We will read the question together in order to save the time. Following information regarding 3 products is given to you. Particulars PQR. Budgeted production of sales units 1800, 3000, then 1200. Selling price per unit is 60, 55 and 50. Then direct materials in kilo, it's 534. direct labor hours, then hours is given, then variable overhead that is available, variable overhead per unit, then fixed overhead per unit, that's also available, then the material cost per kg, then direct labor rate per hour, then maximum possible sale units. Okay, maximum possible sale units. All the three products are produced from same direct material using the same type of machinery and labor. Direct labor is limited to 18,600 hours for the period. You are required to prepare a statement showing the budgeted profit. Also recommend the optimum product mix for the given case and determine the profit of that product mix. It's a basic problem only, but you may get questions of similar kind. Okay, so we will start doing the problem. Okay, so first sub question is to compute the budgeted profit. So straight away you can write statement of budgeted profit. Statement of budgeted profit. You have how many goods? You have three products, so it is a multi-product situation. And is there any limiting factor? Yes, there is a limiting factor. Which is the limiting factor? They talk about what direct labor hours. Okay. Now again, just because they have given that direct labor hours is a limiting factor, it may not be a limiting factor. You have to recompute and reconfirm it that this is a limiting factor. Okay, that we will do when we come to the next sub question. So now statement of budgeted profit. You have three products. So product P, then Q, and then R. What do you have to do? You have to start with the selling price per unit. Okay, selling price per unit. What is the selling price of product A? 60, 55, and 50. 60, 55, and 50. Less variable cost per unit. How do you compute the variable cost? It's given component wise. Material. Direct material. What information do you have? Material kilogram is given and the direct material cost per kg is also available. So kilogram per unit multiplied by the cost per kg will give you the cost per unit. Okay. So here it is. How much? Direct materials 5 kgs, and what is the material cost? 5 into 4, so 20. Then next is 3 into 4, so that is 12. Then 4 into 4, that is 16. So that is with respect to the direct material. Then going ahead, direct labor. Similarly, the labor hours per unit is given and labor rate is also available. So labor hours is 4 into 2, that is 8. Then 3 into 2, that is 6. Then 2 into 2, that is 4. That is direct labor. Now next is variable overhead per unit. Variable overhead. What is the information you have? Variable overhead per unit is given directly. 7, 13, and 8. 7, 13, and 8. Next is what? Fixed overhead. You can consider here because that's not a variable cost. So total. Total variable cost per unit is 28 plus 7 35, then 18 plus 3 21 31, then 20 28. Now contribution per unit. $60 minus 35 will be 25, then 55 minus 31 will be 24, and 50 minus 28 is 22. Okay, so that is the contribution per unit. Then budgeted units is available, right? What is the budgeted production and sale units that is available? 1800, 3000 and 1200. So budgeted sales in units. What will be the quantity? 1800 here, then 3000, then 1200. So budgeted contribution will be contribution per unit into budgeted units. So that will be 45,000. Okay, then 24 into 3 will be 72,000. 24 into 3000, that is 72,000. 22 into 12, 4,200 will be 26,400. So total contribution will be 45,000 plus 72,000 plus 26,400. So 143,400. 143,400. Okay, just a minute. Okay, so that is budgeted contribution 143,400. Now what do you have to do? From the budgeted contribution, you will have to reduce the fixed cost, budgeted fixed cost. Do you have the budgeted fixed cost amount here? Is it available? What is available here is fixed overhead per unit. Per unit is available. Fixed overhead per unit. Now from this fixed overhead per unit, you will have to work out the total fixed cost. Okay, how do you do that? You already know that the fixed overhead is computed on the budgeted fixed cost. Okay, I will give you certain formulas here. Okay, as a note. Manner of absorption of fixed overhead. Okay, how fixed cost or fixed overheads are absorbed to the cost objects or cost units. Okay, manner. What you do is, step number 1, compute the budgeted fixed overhead or fixed cost, okay, for the budget period. Okay, for the budget period, you will be estimating what all could be the fixed overheads, what all could be the fixed cost. So you are doing this budgeting and you have this budget overheads in total. Okay, next what you will do, estimate the production for the budget period. Okay, this is otherwise known as budgeted production. Budgeted production. So one side you have the budgeted fixed overhead, then you have the budgeted production in units. Okay, then third step is what? Compute fixed overhead absorption rate. Okay, and this fixed overhead absorption rate is also written as FOH per unit, is computed using this formula: budgeted fixed overhead or fixed cost divided by budgeted production. This is in units. Okay, so this is the formula. Now what do you have to do? So you have a FOH absorption rate. Next, these three steps happens at the budgeting phase. Budgeting phase. So now you have fixed overhead per unit. What do you do with this fixed overhead per unit? As and when you manufacture a particular product, one quantity of a particular product, what do you have to do? You need to determine what should be the cost of it. Am I right? For which, what you will do, when you produce one unit, you charge this FOH per unit to that particular cost object. That is step number 4. That is charge the FOH per unit to each quantity of cost units or output produced. Okay, say suppose I will give you some examples also here. Suppose the budgeted fixed overhead for the a budget period is, let us take it to be rupees 5 lakh, and the budgeted production is, let us say, 50,000. So what happens here is budgeted FOH is 5 lakh and budgeted production is 50,000. So what would be FOH per unit? Rupees 10 per unit. Am I right? For each unit produced, it's 10 rupees will be charged. Now charge the FOH per unit to each quantity of the output produced. Now during the particular period, okay, actual production was, it need not be 50,000 itself, because 50,000 is only a budgeted production. Actually, it may turn out to be 49,000 or 51,000 also, more or higher than the budgeted. Let us say, actually, we produce 51,000. So, what will happen? Total FOH absorbed will be what? Actual production into FOH per unit, and that will be 51,000 into 10, that is rupees 5,10,000. 5,10,000. That is total fixed overhead absorbed. Now, let me ask you, you have absorbed fixed overhead and it turned out to be a total of 5,10,000. Where you budgeted only how much? 5 lakhs. So on one side you have budgeted fixed overhead, that is 5 lakh. Then you have the fixed overhead absorbed, and how much is this? 5,10,000. Then you have something else also. What? Actual FOH incurred. This actual FOH means the total fixed overhead actually you paid. You estimated a rent of, let us say, 1 lakh per month for a particular machinery, or for all the machineries we are hiring, or for the building, everything together. But it may be like you end up paying 1,10,000 or 95,000, or even 1 lakh itself. Okay, so the point is actual fixed overhead could be different from the budgeted. Though you have budgeted your fixed overhead based on certain factors, that factors may change, due to which your actual FOIs may be different from the budgeted FOIs. And let me say, your actual FOIs incurred was, let us say it is to be 4,95,000. Wow. Now what all things do you have? You have three figures with respect to the FOIs. One is the budgeted FOIs is 5 lakhs. Then one is the FOIs absorbed, that is 5,10,000. Then you have FOIs incurred 4,95,000. Now friends, let me ask you, out of these three, which all FOIs will come in the costing records? Budgeted FOIs of 5 lakhs, will it come into the costing records? No, it will not come into the costing records, because costing records is based on actual production. Okay, so in the costing records, you will have FOIs absorbed to the extent of 5,10,000, whereas FOIs incurred is for only 4,95,000, which means you have absorbed the number of units what we have produced during a particular budget period, have absorbed more FOIs than what is actually incurred. How much is incurred? Incurred is only 4,95,000. But how much you have absorbed? 5,10,000. So 15,000 rupees extra FOIs has been absorbed. And this is what is known as what? Over absorption. Over absorption of fixed overhead or fixed cost or whatever. Is it clear? Now what do you do with this over absorption? There is a difference of 15,000 which you will charge to the costing P&L account. If you have clearly, if you remember the costing sheet which you have already learned in your previous syllabus, then you know that this, after doing this reconciliation, at the end you have something called costing P&L, to which you charge all this under absorption, then over absorption, under recovery, over recovery, etc., etc. Is it clear? So this is what you do with your fixed overhead. Now coming back to the problem which we saw. Now what is your requirement? You need to find out the budgeted FOA, the fixed cost, and what you have is what? FOH per unit. And what is this FOH per unit? FOH per unit is nothing but what? This is the product. This is the item. Okay, so if you know this, and what else you know? The budgeted production units, that also you are you know. So you can easily find out FOH budgeted, or you can write here budgeted fixed cost is equal to FOH per unit into budgeted production. Okay, FOH per unit into budgeted production. And how do you get this? You get this as budgeted production is 1,800, and what is the budgeted FOH here? Budgeted FOH here is rupees 10 per unit, plus here it is 3,000 into 10, plus 1,200 into 10. That will give you how much? The total will be 18,000 plus 30,000 plus 12,000, 60,000. So that takes you to the budgeted profit. One lakh 43,400 minus 60,000 will be 83,400. So you can conclude, therefore, the budgeted profit of the company is rupees 83,400. Okay, so that's done. Budgeted profit we have already computed. So that's only a basic thing. Okay, and friends, I want you all to keep in mind this manner of absorption of fixed overhead, because this will help you in a lot of problems, especially when you come to the standard costing. To understand the standard cost with respect to the fixed overhead and its various analysis, this understanding is very much required. Okay. Now what is the next sub question? Next sub question is, recommend the optimum product mix for the given case and determine the profit. So determination of optimum product mix. Okay, how do you compute optimum product mix? We're going to write the computation of optimum product mix will be based on the existence of limiting factor, if any. Hence, we need to determine whether any of the existing factor of production do act as the limiting factor. Okay, now if you read the question carefully, the only possible factor of production which could act as the limiting factor is what? That is direct labor hours, and they say that the availability of direct labor hours is 18,600 only. Okay, so identification of limiting factor. We can write direct labor hours available is equal to 18,600, right? Then maximum direct labor hours required for maximum production. See, you need to find out the direct labor hours required for maximum production. So first you have to compute what? You need to compute what is the maximum production. Okay, so maximum production in units. You have P, Q, R. P, what is the maximum production? If you go through the questions, you know what is the demand given? No. Here they say that maximum possible sale units is available. Okay, maximum possible sale units is available. 4,000 units of P can be sold, 5,000 units of Q can be sold, and 1,500 units of R can be sold. Is there any information regarding the production capacity? No, there is no information regarding the production capacity. What is given here is only the budgeted production of sale units. Okay, you can sell up to this, but what you are doing currently, you are producing only this much, producing and selling only this, because you have what? Limiting factor. Okay, so there is no production capacity given, but there is a limiting factor. Limiting factor is different, production capacity is different. Okay, limiting factor could be any factor of production, whereas production capacity is based on the installed capacity of the machines. Is it clear? Okay, right. So here there is no production capacity constraints. Okay, so maximum possible units can be taken as the maximum possible production. So here what I am doing is I am writing here as maximum production units as maximum demand. Why maximum demand? Since there is no production capacity for individual products, maximum production is equal to maximum demand. Okay, and what is this maximum production? 4,000, 5,000, 1,500. 4,000, 5,000, 1,500. Now what do you have to do? You need to compute maximum DLH required for maximum production. So DLH, the direct labor hours per unit. How do you compute this? Direct labor hours per unit is given 4, 3 and 2. So total DLH required will be 16,000, 15,000, 3,000. So this is 15 plus 15 is 30, 31 plus 3, 34,000 hours. Okay, what is the direct labor hours available? It's only 18,600. Okay, whereas maximum required is 34,000. So is it a limiting factor? Yes. So you can conclude, since the available quantity of direct labor hours is much lower than the total direct labor hours required for maximum production. Total direct labor hours required for maximum production, comma, direct labor hours do act as a limiting factor. So it is a limiting factor. Okay. So having identified the limiting factor, what do you have to do? You have to do the ranking. Okay. Now, statement of ranking of products. Okay, what do you have to do? How do you have to rank? You need to rank the products based on contribution per unit of limiting factor. And what is the limiting factor here? It is direct labor hours. So you have to compute contribution per unit of direct labor hours. So P, Q, R. So you have to start with what? You can start with contribution per unit. Contribution per unit is 25, 24 and 22. Then what? Direct labor hours per unit. Direct labor hours per unit 4, 3, 2. (25) divided by 4 is 6.25. This is 8 and this is 11. Now rank. First rank will go to the highest rank product, that is R, followed by Q, and first one for P. Okay, so this is the order of the ranking. Now after doing the ranking, what do you have to do? You need to compute the statement of optimum production plan. Just listen how we are doing this particular optimum production plan. First is rank. Product maximum production quantity produced, direct labor hours per unit, direct labor hours required, direct labor hours balance. What does it mean? Rank is the first rank product. You should start with the first rank product. Which is the first rank product? First rank product will be C product. Sorry, it's R. Product R. Then what is the maximum production possible? How much maximum you can produce? You can produce how much we have already computed. What is the maximum production? Maximum production is 1500. So out of this maximum production possible, how much you will produce? You will produce 1500. So because it's the first time product, so produce maximum. What is direct labor hours per unit? It is 2. So direct labor hours required is 1200, 1500 into 2, that is 3000. So what is DLH balance available? Total available is 18600 minus 3000, that is 15600. 15600. Is it clear? Yes. Then second ranked product, that is Q. Maximum production 5000. Then labor hours per unit is, quantity produced is 5000 itself. This is 3. Am I right? So 5000 into 3. 15,000 also you have exhausted. So here 15,600 minus 15,000, that will be 600 only. That will be 600 only. Then third rank product is P. Maximum production possible. How much? 4,000. I think 4,000, right? Maximum is 4,000. But can you produce maximum? No. Why? Because what you have is only 600. So out of 600 or using the 600 hours, how much you can produce? That is what you have to write. So balance anyway will be nil. Then DLH required will be, available is only 600. So that is the maximum production possible. Then what is the per unit? Per unit is 4. So dash into 4 should become how much? 600. So that is 150. 150 into 4. So here it is 4. 150. Is it clear? So the remaining was 600, using which you can produce 150 units of P. Okay, so this is the optimum production plan. Now one more sub question is that you need to find out what is the maximum profit for this optimum production plan. Okay, I told you the optimum production plan should be the production plan which yields you the highest profit. Optimum profitability. You should start with production plant. P, how much you will produce? 150, 5,000, 1,500. Okay, you have already computed contribution per unit. Not per unit, the limiting factor, it is contribution per unit. How much did you compute? 25, 24, 22. Okay, total contribution. Total contribution is 150 into 25, that is 3750. Then 5,000 into 24 will be 1,20,000. Then 1,500 into 22 will be 33,000. And total contribution will be 156,700 less fixed cost. Tell me, will there be any change in the fixed cost with respect to the budgeted fixed cost or the fixed cost to be adopted here? No, it will be one and the same. So whatever fixed cost you have already computed in the previous question, how much is? It is 60,000. Same thing have to be adopted here. So 60,000. So revised profit, or you can write optimum profit. Optimum profit refers to maximum profit. Okay, so this will be 1,56,700 minus 60,000 will be 96,700. Any calculation error? I think yeah, here it should be 3750 plus 1,20,000 plus 33,000 will give you 156,750. Please, it's not 700, 750. So basically here also 96,750. Okay. So budgeted, what was the budgeted profit? Budgeted profit, or the profit for the budget which they had prepared, it was 83,400. So what happens? By adopting this optimum production plan, your profit is going to increase from 83,400 to 96,750. So increase in profit. Increase in profit. 96,750 minus 83,400, that is 13,350. Okay, so you can conclude the optimum production mix will result in an increase in profit of 13,350. Result in an increase in profit of 13,350. Is it clear? Okay. So this is one question in the limiting factor analysis. So whenever there is a limiting factor, you have to rank the multi-products on the basis of contribution per unit of limiting factor. Then rank the products based on the contribution per unit of limiting factor. After ranking, what you have to do? You need to determine the optimum production mix. How do you determine the optimum product mix? The production, the item or the product having maximum contribution per unit of limiting factor should be produced to the maximum. Okay, followed by the next highest product, then followed by next highest product, and like that it goes on till your entire limiting factor available is exhausted. Is it clear? Okay, right. I'll just come.